today to tackle some of the problems that were not handled. Mr. Okoro, just hold on, something is popping up on my screen.
Good. So, good evening. Before Mr. Okoro comes up, Eunice, if you don't mind.
Yeah.
Okay. So, just to put everything in perspective, so that we don't because I'm already looking at the time and I'm laughing. So, I need to just give some background to what happened last week. Last week we started with the fact that the FRS had issued a public notice on some tax inquiries that we are used to already. And those areas were the DEX examination and monitoring exercises, the tax audit, investigation, and special tax crimes investigation, then the turnover determination. So what the FRS tried to do is to clarify taxpayers, the public, on these issues. And it's very important because most of the time their own staff are not even exposed to these things, and they make things complicated for taxpayers. So it's very handy that the FRS will go on this journey to provide clarity. And I also want to remind us that last year, I think August 2022, they also issued guidance note on tax audit and investigation. The same thing, they try to give an overview of what pre-audit means, field audit, and post-audit. That was last year, August. On this guide, it was issued. They had a meeting with stakeholders in August last year, and issued a guidance note on October last year on the same tax audit and investigation. So it seems like it's an endless book. We just keep reading the book, and it's not ending. So Mr. Koye last week tried to provide clarity to a lot of them. What I'll just do in the next 5 minutes is to just go through those guidance notes, so that when we are discussing today, we'll just look at those things and now take some questions that people ask. So just like summary for what happened last week, for the DEX examination, it's good to know that they are limited to the current year tax returns. However, if multiple tax returns are filed simultaneously, they will be considered for review and monitoring. Then DEX review does not involve physical visit to taxpayers' premises. I'm doing a recap from last week actually, or request for source documents related to revenue or expense items, and should be concluded before tax audits or investigations commence. 3, DEX reviews and monitoring exercises do not preclude the tax authorities from conducting their tax audit or investigation. So it does not stop them from going ahead to carry an audit. And findings from DEX reviews should be considered during the tax audit or investigation. Number 2, tax audit. These are more of like back duty verifications with a maximum of 6 preceding years. Maximum of 6 preceding years. So the question of can they go above more than 6 years is what we're looking at today also. Can they go 7 years, 8 years backwards? And again, an adjournment to that question again is, if a taxpayer, if a taxpayer, please take note of this question. If a taxpayer had not filed returns for a period of 7, 8 years, and now files returns for 6 years for the first time, can the taxman go back in 8 years to do an audit? That should be a question for this evening. Because the tax guideline is saying the tax audit cannot go beyond 6 years, maximum of six preceding years. So if a taxpayer has not filed returns at all, and we have a lot of them in Nigeria, and they decide to file for the first time and they file complete 6 years, can the taxman go beyond 6 years to do an audit, or will it become an investigation? Then the tax audits that we done cannot stop them from doing an investigation. So it means during the tax audit, if they find things that are criminal or as a signs of tax avoidance or evasion, they can go ahead and do an investigation. That's number 2. Number 3 is investigation. This one is more like a comprehensive examination of violations of tax laws. Violation of tax laws, which must be initiated by triggers. So what are those triggers that can initiate an investigation? Based on this guideline issued last 2 weeks by FRS, there is no restriction on the number of years under scrutiny. So it means that if you can't conclude a tax audit, or FRS feels that there are issues to be considered, they can now go into investigations, and there is no limit to the number of years they can go into. And investigations can result to criminal prosecution. So it's very important to understand this thing. So looking at that circular, just want to round up on here. Try to pick it up. What are the triggers that could lead to an investigation? Number one, cases referred by tax audit department. Maybe cases that we are done under routine audit and where fraud was detected, then they can refer to investigation unit for investigation. Then if a tax audit exercise failed, maybe they're not cooperative, they're not willing to release documents, then they can establish, they can commence an investigation. Or when they see that the financial returns, the tax returns are not consistent, then they can now, that means when you are doing your account, maybe you go and file in CAC, you file one account, you go to FIS, they file that kind of account, you go to the bank for loan, you have 3 different accounts for your business. Once that is noted or noticed anyway, then it becomes an inconsistency in your statements. It becomes a ground for tax audit. There may be failure to file taxes or referrals by tax controllers and departments, or lifestyle discrepancies. Lifestyles, we are seeing you on Instagram and Facebook and living bogus life. Meanwhile, your tax returns for your company is nothing to show about. Explain how you made those money, then they can do an investigation. Unexplained losses, resistance to tax audit, persistent low tax to turnover ratio for 3 years, persistent low tax to turnover ratio for 3 years. Please monitor, take this one down. Persistent low tax to turnover ratio for 2 years. Deliberate or fraudulent understatement of income or overstatement of cost, which is where a lot of companies, fall victims. You pad your costs, or you don't call in transfer pricing, profit-based erosion. You move your profits to tax heavens, by way of inflating costs on some areas. Maybe you have a JV with a sister company, you now move all your costs, all your profits to that other company. So all those things can lead to investigations, so all those things are triggers. Triggers, even when shareholders have boardroom squabbles, disagreement, prolonged claim of dormancy by taxpayers, money laundering, discovery of abusive tax schemes. All these things there are triggers that can lead to an investigation, and all those ones, and they will now have special task investigations like forensic accounting, special teams going to look for crime, when there's triggers, then all those things are part of what they gave guideline. Then for transfer pricing as well, there's a unit in the FRS office that in charge of transfer pricing, looking at your related company transactions to see if they are at arm's length, and finally, they have what they call the turnover threshold determination. They've outlined guidelines of determining, what your turnover for the year is. And so these are the background of our last week discussion, which we try to provide explanations and breakdown to. So I think I've just done basic summary of what happened last week, and I'll just allow the moderator to take it up from there. Thank you, and over.
All right, thank you very much, Umar. So in light of this, we would start from the question that has already been sent in, pending when we get any more questions or need to do clarifications on the above, right? So Mr. Koro, good evening, sir. Mr. Koro, are you here?
Yeah, I can hear you.
Okay, I want to start with the first questions that was sent in relating to NGO.
Okay.
He said, are all NGOs exempted from all forms of taxation? The reason for asking is that in my industry, the NGO tells us that they are exempted from taxation, but we are currently having issues with the FIRS, who says that the NGOs are vatable. Now, Mr. Koro, could you throw more light? What are NGOs? What tax incentive do they have?
Okay,
And
before
which
Mr.
tax
Cole comes in, sorry, let me give a background to that question so that we understand. The sender is a GM of a big hotel in Abuja. Yes, the sender is a GM, general manager of a big hotel in Abuja, and the NGOs use their hotel a lot for activities. So, when they charge the NGOs VAT, the NGOs decline to pay those VAT because they say they are NGOs. So the issue is he is having issues with FIRS. FIRS is saying you're meant to deduct to charge add VAT to your invoice and remit those VAT to FIRS. But the NGO is saying no, we can't pay you VAT because we are exempt from paying VAT. That's the background of that question. Over.
Okay, but to get a clearer picture, I think Mr. Koro can give us a run through on from the aspect of the NGOs and then from the aspect of the company dealing with the NGOs. Mr. Koro, over to you, sir.
All right. Good evening, everyone.
Good evening.
Good evening,
yeah, good evening. So, we'll first of all, look at what NGO is all about. NGOs actually include organizations, ecclesiastical, charitable, benevolent, literary, scientific, social, cultural, sporting, or educational activities of a public character. That's an NGO. Now, if you look at section 105 of CETA, it defines public character to mean any organization that is registered in accordance with relevant law in Nigeria and does not distribute or share profits in any manner to its members or promoters. Now, if an NGOs rather are not exempted from all taxes, that is just the simple truth. Now, if hello?
Yeah, we can hear you.
Okay, NGOs are not exempted from all taxes. Now, for VAT, for any goods purchased by an NGO for use in humanitarian donor-funded projects, such good is not actually non-vatable, but it is charged at zero rates. That is, we call it zero-rated goods. I don't know if it is clear. So NGO itself is not exempt from VAT. So where an NGO consumes a product or a service, let's say a product that is not used for humanitarian donor-funded project, such product is vatable, and then the NGO is liable to pay such VAT. So based on the scenario which Omar just brought up now, that maybe NGO, maybe they lodge the hotel, for example, if I'm not mistaken, and then the hotel charges VAT, and they are saying they will not pay the VAT. The NGO is particularly wrong. The NGO is supposed to pay the VAT. It's just like where an NGO awarded a contract to a supplier, maybe to supply goods, and that goods is for the consumption of that NGO, not for use in humanitarian donor-funded projects. Such product is vatable, and NGO is liable to even deduct withholding tax from the supplier and remit them to FIRS.
In fact, Oko, just hold on before you continue. Let me just even add to what you are saying. Most of these NGOs, they actually deduct withholding tax and remit, but they don't want to pay VAT. Go ahead.
Okay, now that is where they got it wrong. So the VAT aspect, whereby, like you mentioned in the case of that hotel, that NGO is expected to pay such VAT to the hotel, of which the hotel will remit. So that is just the basic, that's the answer to that. Then the issue of CIT, the question is the activity part of approved activity for the NGO? If that is yes, it means that any profit, any income, or let's call it because in this case, we'll not call it profit. We said that surplus is not vatable. But whereby the NGO engages in trading activities for profit, such income arising therefrom will be taxable under Companies Income Tax Act. So we should not mix the whole thing up. The profit of an NGO, not surplus, because if you prepare account of an NGO, what you show as the excess of maybe the income over expenditure is a surplus, but whereby the NGO carries on trading activity and there is a profit, such profit is liable to taxes.
Okay,
Again,
okay. Sorry, hold on.
Okay.
Let's pause you here a bit. I don't want to dive into dangerous waters right now because see, okay, an NGO. I'll come back to the humanitarian services because we have two type of donor funded projects. We have the ones that are humanitarian in nature and those are developmental in nature. The humanitarian ones are the ones we look at for maybe crisis prone areas where we have crisis, disasters, and the rest of them, natural disaster or war. Those areas are humanitarian services. We now have developmental services that has to do with development. For example, the donor-funded project is working on water wash in Abia State or Imo State, or working on let's say agricultural inputs in terms of market systems development and the rest of them. You know, those ones are developmental. I'll come back to that one again in terms of what differences they make and how we should look at VAT in terms of what the VAT Act is saying. But looking at the CIT, for example, for now, if, for example, an NGO, local NGO in Nigeria, carries out an auction sale, you know, an auction sale for equipment they've used for other past projects, and they sold those items and made profits from those items and plug them back to humanitarian services or to their NGO, should they be made to remit taxes on those auctions? That's one. Two, what if they even engage in, they write a book or do something to drive funding for humanitarian services and they sell these books? You know, they trade and they sell these books, you know, to fund their activities. Should they be subject to CIT? And that's what is on my back of my head also. Go ahead, please.
Okay. The first one you mentioned, the aspect of selling maybe their assets.
Yeah, auction
to fund.
Auction it off and trade.
Let me break it down a bit again. Let's say this asset you are bought by a donor, agency, maybe let's say GIZ or USAID or UKAID, and donated this equipment to this local NGO who used the equipment for, let's say, 2 years, and they were done with that project, no more funding, and they need to dispose this equipment now to make more money. That's the background. Over.
Okay, now if you look at the issue of disposal of an asset, so we'll be looking at the capital gain tax here now. So if you look at section 26 of capital gain tax, whereby you have gains arising from disposal of chargeable asset of NGOs, is exempted from tax where two conditions are met. One, the gains are not derived from the disposal of any assets acquired in connection with any trade or business carried on by the organization, that is the NGO. And then number two is that the gains are applied purely for the purpose of the activities of the NGO. So now you, like the one you mentioned now, they dispose their assets and then they plug back that proceed for the purpose of that NGO. That is exempted in line with section 26 of capital gain tax. I don't know if that answers the question.
Yes, clear. Go ahead.
All right. Okay, that's okay. There's another question you asked. Maybe I didn't get that clearly.
Okay, so the other question is now, the NGO now involved and engaged in trading, but for purpose of fundraising, they try to buy some products, books, they sell, make money. You know, they write a book, they sell, make money, do some launching, just something that will give them money. You know, or they say they have a bookshop or something that sells some of their research materials. That's what NGOs are going to research, and they sell these things to make money. Such proceeds, should the FRS come after these NGOs?
Well, that is another form of trading. Okay, that's another form of trading.
I will fight
like,
you. I will say no.
No, let me come now.
It's actually profit liable to companies.
Why is it profit? Why is it profit?
Let me come. It's just like no, hold on now. No, it's just like you have a church, because you classify church to also as an NGO, right? Now,
yeah,
the profit of the income of a church will include the offerings, right? You have the tithes, you have the donations, then you have money maybe from launching and all that. But whereby a church engages in another activity outside of this revenue generated aspect of church activities, then the revenue from that aspect becomes taxable. So if, for example, maybe the NGO engages in writing of books and all, is under trading, okay, in a way of making money, because maybe their major revenue stream is only maybe for donation or grants given to the NGO. But if it engages in other activities, like this one you mentioned, like, okay, they can write a book, they can even decide to buy maybe one product or service to sell out to get more money to fund the same activities of the NGO. That becomes trading.
Okay, should NGOs do annual tax returns? I know trading. They file.
Are fighting anybody?
Okay, yeah. Hold on. Should they file? I know yes. NGOs, they file for CACA, CAC annual returns to CAC. Should they? Yeah. Should they? Whether they make profit or not, whether they receive only grants and donations, they don't do trading, whatever they do, should they file annual tax returns, and why?
Now, if you look at section 55 of CETA, if you look at subsection 1, it is mandatory for every. Hello?
Yes, go on.
Hello? Okay.
We can hear
you. If you look at section 55 of, 55 of CETA, subsection 1 of it, it is mandatory for every NGO to file returns every year. And such returns must contain the audited accounts, tax and capital allowances computations, and 18, containing the amount of each surplus from each and every source computed in accordance with the provisions of CETA. Then such particulars as may be required in such form for the purpose of the Act with respect to such profits, allowances, relief, deductions required. Now, remember that filing account or filing annual return does not amount to payment of tax. That is what I want you to understand. For the fact that you're filing your returns does not mean you are going to pay tax. You can file a returns without paying any tax. Remember that the surplus of NGO is not taxable. What is taxable is profit arising from trade, not the surplus of an NGO. So NGO can file returns, but not paying any tax. It's just like NGO. Remember that even NGOs are expected to file their monthly. I hope that they are expected to file their monthly returns. So filing does not mean payment. Filing is different from payment. You can file a return without any payment. What FRA is trying to achieve by this filing is to ensure that some NGOs are not doing what's outside of what they are expected to do, because some NGOs can actually use the name of that NGO to trade. And then it's another way of evading taxes. So you can file. When you do your filing, you now declare. That is why you declare surplus you have from all aspects. Is it from donation? Is it from grant? However it came, declare it. So after declaration, the question is that is that surplus liable to company income tax and education tax? The answer is no. The only portion of your profit that will be liable to tax is that aspect relating to trade. I don't know if you understand that.
Yes.
I will rest my case for now. I'll come back.
Okay,
Let's proceed first. I'll come back.
Mr. Ma, you know you are speaking from your NGO experience. Let
I'll
us
come back.
speak.
Don't worry.
Let us breathe. Mr. Onwuka, so I want you to throw more light on what gave root to this initial question, which is the hotelier. Now, assuming that this NGO is registered under the SITA provision, Schedule 5, now can that hotelier claim that those things that the NGO consumed was form of donation to them?
No, it's not really, it's not donation. It's normal, it's normal, how do I put it? It's normal consumption by NGO. So it cannot claim that.
Even if the NGO is registered under this under Schedule 5 and has exemptions.
No, the exemption, see, we're mixing everything. We're mixing it up. Their exemption only relates to that's their specific approved activity.
Okay.
Approved activity. That is where the exemption stops. So anything outside that is why even an NGO, like now NGO engages maybe a supplier. So are you saying because an NGO it not withhold tax and remit on behalf of government? The answer is no. So if an NGO maybe enjoys hotels, there is nothing that stops the NGO from paying taxes, from paying VAT to the hotel. I don't know if you understand.
Okay, let me come in again.
Not exempt.
Let me come in again. Sorry. I think when we look at the issue of VAT, we should not look at VAT from the perspective of the industry. We should look at VAT from the nature of transactions. Because the VAT schedule is based on exempt items, both goods and services. So we should not argue VAT based on, oh, is the industry, is a church, is an NGO, is this one? No.
Yeah.
You look at VAT from what are the exempted items, what are the zero-rated items. Those are the issues we should look at from that. The only problem here is this, where the law mentioned the fact that if those goods are used for humanitarian services, and that's why I have a problem now. Because I'll give an instance. Let's say the NGO, Uma Foundation, is doing education project in Yobe or Gombe State. And one, we are buying books, from a donor-funded project. We are buying books and supplying. Those books, by nature of those books transactions, they are books for education purposes. They're not meant to be VATed, right? So those books are exempt from VAT. Yes. That is one. What if I now travel? I travel to Maiduguri to supply those books, and I lodge in the hotel. The money for lodging belongs to the donor. The purpose of lodging was to distribute those books. The books are VAT exempted, and the books are used for humanitarian services. If I lodge in a hotel for that purpose, should I pay? Because should I pay VAT? I'm coming. Except I'm giving you one example. Except we say education is not humanitarian. It's not humanitarian activity, because the issue of what do we classify as humanitarian and what do we call developmental? Those two things are confusing. If I am, go ahead, Duko.
The truth of the matter is that the books on their own, they are exempt items. That's just the truth of the matter.
Yeah.
Then, if maybe as an NGO, like as you mentioned, you purchase those books for whatever in another location. Now you are traveling and you lodge a hotel. that doesn't stop the VAT on the hotel services you've consumed.
You know my
So
advice now.
it's a kind of another service. There are two different things. Okay? We're talking about that particular books, they are not vatable.
Moderator.
Even if it is not books. Hello?
Moderator, can you hear me?
I'm listening.
Should I recommend something?
Okay.
Can we take other questions and come back to this NGO thing later? So we'll end with NGO.
Okay.
Can we take other questions, then come back to NGO later? Because I'm going to go into that level now.
We don't have much, but let's quickly finish this so we can
come back. Yes.
So, Koroso, we have one question from Mr. Falano. He says, must withholding tax be deducted from all invoices? And while you're handling that, also, Gabriel is asking that some NGO deducted withholding tax from their payments and they are still chasing them to remit. What should they do?
Okay, NGOs deducted, let me start from the second one. NGOs deducted withholding tax from their from whose invoices? Okay,
from Mr. Gabriel's invoices, from payment due to him, to his company.
Okay, the NGO deducted withholding tax from, let's say, suppliers' invoices, right?
Yes.
Okay,
and they have not remitted it to the FIRS.
And NGO has not remitted to FIRS.
Yes.
So what's the next question?
They are chasing them. What should they do? The next question is on withholding tax. Must withholding tax be deducted from all invoices from an NGO?
Okay, from an NGO again.
Payment to their suppliers.
Okay, payment to their suppliers. Okay, now the truth of the matter is this: if NGOs deducted withholding tax from their suppliers, and they are expected to remit that same withholding tax to FIRS or any other relevant tax authority for that matter, whether state or federal, whichever way. So I don't know why they are, since they have deducted, which they have the right to deduct, and they have not remitted. I don't know why they are keeping the money. So if FIRS is chasing them, they should go ahead and remit the money. Is what they are expected to do within the law. Then the issue of whether they are expected to deduct withholding tax from all suppliers' invoices. There is no law that says withholding tax should not be deducted from a supplier's invoice. After all, withholding tax is advance payment of tax. So the introduction of the withholding tax is just to reduce level of tax evasion by some companies. So if at all you have a transaction with a supplier or another company and you withhold, the next thing to do is to remit, which the NGO do. So there is no law that says a particular transaction should not should not be withholding tax should not be deducted on a particular transaction.
It should be deducted.
Go ahead.
Deducted. So in a case where they have deducted withholding tax and they have not remitted, what should the company do? That's the question. What should they do? Should they report?
Okay, what the
go
company?
To court.
Go to court.
Should they do? They will not go
what
to court. NGO, they should go and remit. They should go and remit. They shouldn't hold the money.
They have not remitted. What should the company do?
Which company? Sorry, let me come in. Which company? The NGO or the company they deducted from?
No, the NGO have remitted the withholding tax.
That means the money is still with the NGO.
Yes.
Why is it? It's not supposed to be a problem now. NGO should go ahead and remit.
Okay. So let me come in here. Let me come in here. You know, so the issue here is I understand where Gabriel is coming from. Some people deduct withholding tax, they don't remit it. Some use it for their cash flow planning. They wait until they have
they wait.
Yeah, so cash flow. So the point is, if Gabriel FIRS will not come and chase Gabriel for withholding tax that their customer withheld, they only chase Gabriel for the one he deducted and did not remit. Do you get? FIRS will come and chase Gabriel for the withholding tax that Gabriel deducted from their own customers, suppliers, I mean, and did not remit.
Yes.
But the one that you supply and they withheld from you, they won't chase for those ones. They will not chase more like the NGO to remit. So the point here is, if you now need to see your credit note on tax promax and you can't find them to offset your tax liability, it becomes a problem. You now have to now follow up on the NGO, asking them for evidence of payment. The main issue right now is that before now, back in the days where there is no tax promax, you can use payment advice from the customer and tell FRS, look, we render service to these guys, they deducted from all, they did not remit, we have this liability, this credit note. But now it has to show on tax promax. That is only when it can be used to offset your liability. So it's now boiled down to you following up and pressurizing the NGO to remit all those taxes and give you evidence of remitting them. I don't think there's anything else you can do if not following up.
I think there's what Mr. Ikechukwu is saying. Ikechukwu is saying that they should report the NGO to the tax authorities.
That's the extreme case now. That's the extreme case.
No, of course, that's the extreme case where you don't want from them. But Mr. Gabriel,
exactly.
So I think it's an extreme case. Hold on, look at an extreme case, because most times when you do this follow up and you write these letters, I've been written before by hotels. Oh, our auditors are auditing us now. They want to see our credit note. Oh, FRS is doing audits. They want to get our credit notes in tax promax. Can you help? And we'll check our book. And, oh, we're actually missed to remit this particular period. We'll remit them. So the case of follow up is an extreme case where you now begin to report that particular NGO organization to FRS. It now becomes you've tried all you could do and couldn't recover the money. Do you understand? It becomes a problem. You understand? So let's proceed. The other questions are coming up.
Let's proceed.
Please go ahead, moderator.
Can I take the next question?
Please go ahead.
So let's proceed. I hope Mr. Okoro was able to answer that question, Mr. Falano. So, Mr. Okoro, what of churches that do bazaar? Is their income from the proceeds taxable? Mr. Ikechukwu is asking.
No, the answer is no.
So their income from the bazaar proceeds is not taxable?
It's not taxable. It's more of launching, so it's not taxable.
Okay, but income from bookshop owned by a church, income from schools owned by a church, are they taxable?
Yeah. Income of a school owned by a church.
Yes, and a bookshop owned by a church.
Profits reported at the end of the day. It's taxable. A bookshop. Yes. Remember, we are the tax we are looking at now. Hold on, the tax we are looking at is not the VAT. We are looking at the end of the year. If the account from that aspect of the business is prepared and there is a profit, that will be taxable.
Okay.
Just like a church that has school, and at the end of the year, there's account prepared for that school, and it shows profit. Now, such will be taxable.
Okay.
But depending on how the church, depending again how the school was registered. Was it registered as under a business name or a limited liability company? That will also drag us to another level of discussion.
Okay.
Ms. Suma, you have anything to add to that before we
No, just go ahead. Anything to add now is argument. Go ahead.
All right. I don't want us to, I think we'll have 10 minutes for closing, but before we go that, Mr. Koro, is my mechanic business liable to VAT?
The answer is yes.
Why?
The answer is yes. Mechanic business is liable to tax because income from mechanic business is not part of exempt items in line with the first schedule of the VAT Act. So if you look at the first schedule, there is nowhere it is mentioned that income from that business is exempted from VAT or any form of tax.
If it's an undocumented mechanic.
Yeah?
If it's an undocumented mechanic.
Whether it's documented or undocumented, whenever you have issue with the tax authority, that's when you know whether it is vatable.
So I think the main thing here is for the mechanic, because this question came from Facebook actually, And the mechanic is, the guy is educated and has a good mechanic workshop and trying to understand if their auto shop should charge VAT. So the point is, if I drive my car into the auto shop, you know, and I go to, they change my tire or just they fix my bumper, should they, and most times I just pay them transfer, you know, should they issue me a receipt, you know, with vatable receipt, or should it be when it's a contract? Let's say the auto shop, they work for a company on retainership, the maintenance services and the rest of them. So when they do these services every month, they issue an invoice, a VAT invoice to the company. You know, how do you handle VAT when I walk into your workshop, fix my bumper, pay you money in cash or transfer or POS? You know, how do you handle the issue of VAT in that case?
Yeah.
When it's not a contract.
Okay. No, it doesn't necessarily need to be a contract. It's just like a case of you walk into a restaurant, let's walk into a Javnik and eat. Okay, just check your receipt. There will be a VAT on the amount you paid for. Okay, so there's no contract between you and Javnik. You only walk in there to eat. So it's just the same thing with a mechanic workshop. You can just go there. It's just like a structure within the workshop to say, okay, whoever that enters here, we're going to issue a receipt to that person, and whatever we are charging, we are going to include VAT on it. So whether you include, you make your, hello?
Yeah, go ahead, I hear you.
Yeah, whether you make the amount payable to be VAT inclusive or not, that is no longer a problem. The issue is that you're supposed to include VAT on whatever you are charging, especially when you have a well-structured place. So that is just the issue. So the income of a mechanic is not exempted from VAT. So he's supposed to pay the VAT. So again, whether the shop is registered as a limited liability company or just under business name is another discussion. Whether it is further liable to companies' income tax and all that. But the aspect of VAT, whether limited liability or an enterprise, is just there. So it's not exempted. It's vatable.
I think the next question. Go ahead, then. Eunice, the next question.
So,
please.
Mr. Korowa, basically, there's no across the counter or contract of sales there. It should be inbuilt into his invoicing system.
Exactly.
Okay.
Exactly.
I hope that is clear to who asked it. So I have a question here. It says that if a client gives a purchase order without service charge, or before we go there, can you briefly explain this 25 million threshold?
Thank you. Thank you. Perfect. It goes together. Perfect.
Okay. The 25 million threshold, you know, the Finance Act 2019 actually classified companies into three now, as it is today, using turnover threshold. So if a company is, for any financial year, your turnover is between 0 to 25 million, then of course you're a small company and you are exempted from all taxes, So that is it. So if from 25 million up to 100 million, now you are now a medium-sized company. Of course, your tax, you are not exempted from any form of tax. Then depending on the industry in which you operate anyway, then your tax rate also differ. Maybe if the company income tax is now 20%, and of course the education tax remains 2.5%. Until the recent increase. From 100 million and above, you are now a big company. Your company income tax rate is 30% and education tax is 2.5%. So for companies within the 25 million threshold, they are exempted from all taxes. So you are not, what it means that you are not expected to charge VAT on your invoice until you are able to reach that 25 million. So if like that mechanic shop, you are still operating within for a particular year, then your income is not vatable and you're not going to pay any tax. Your tax rate is 0. That is, your company income tax rate is 0. Your education tax rate is 0. I don't know if I have answered the question.
Let me come in here, and I find it confusing and controversial at the same time at this point. So let's take an example. Let's say the mechanic guy goes to what do you call it, Ladipo Market, or goes to Ikoku, or goes to Zuba, and buys spare parts. Those spare parts, are they liable to VAT?
Yes.
So the mechanic can, if the spare parts company is a big company and they can issue a VAT receipt, so they will issue the mechanic a VAT receipt and he will pay the VAT, right?
Of course.
So just to have that clarity, it does that you are 25 million below threshold does not mean you are exempt from VAT. What the background of that Act 2019 was actually to reduce the burden of administration on small companies, because the burden of filing monthly VAT returns. If you don't have enough staff or you don't have enough money to hire a consultant, that administrative burden that goes with monthly VAT filing, it's what the Act tried to remove. Not that the transactions are not VATable. It's just that SME cannot, administer VAT. Administering VAT means putting VAT on your invoice, getting the VAT from the customer, remitting the same VAT to the authorities, and filing your monthly VAT returns. That is the burden they remove from you.
VAT returns,
yes. So it does not mean that you will not pay VAT on that transaction. And it also brings to the other part of the VAT issue, the issue of self-charging, and withholding, which we won't discuss today. Because I asked this question to, it was during COVID. Yes, one of the, last 2 years, one of the guys who drafted that 2019 Finance Act, he came on this platform and he spoke on his own, not on behalf of FRS. He said that, but I asked him, if the two companies, for example, let's say, okay, let me calm down. The big company who is receiving the services, although the small company did not charge him VAT, should self-charge and remit. It's arguable, can be challenged in court. That's one. However, if both companies, both the seller and the buyer,
Uma, are you here?
Can you still hear me, please?
Yes, you were cut off when you said the person that one of the guys that drafted the act.
Okay, sorry. It's Nigeria now. Our network. I have 3 networks on standby and network issue. So I'm saying that when we had that discussion, that was 2 years back or so. The argument was, if the small company who is supplying services to another company, they cannot issue VAT on their invoice because they are small. However, the one receiving the services should self-account for that VAT because that transaction is not exempt from VAT. That was one argument. Second argument was that, what if the seller and the buyer are both small businesses? So the seller cannot, issue a VAT receipt, and the buyer cannot self-account because both of them are exempted from VAT administration. In that instant, does it mean that transaction is now unvatable or VAT exempt? That is the lacuna in that act, and that is not very, very clear yet on who bears the burden of that act based on the 25 million threshold. Also, it's good to also advise the mechanic, even if you want to now start implementing VAT on your invoices, some guys may just go to the roadside and do their business, get a mechanic on the roadside. So it's also good to find a way to include that VAT in your cost when charging, the customer, so that when they pay you in your books, you will find a way to account for that VAT, so that that money will not hang on your throat. That is, if you have reached 25 million threshold, it's a way of saying, okay, I won't chase my customers away because in Nigeria, we're not used to this VAT thing. Come in, I'll fix your car, pay me my money. But in that cost I'm charging you, in my head, I'm moving a VAT portion in my books for the government, and I will remit that. That is just my own advice, to that mechanic. But the issue of threshold, VAT administration, burden of VAT remittances is a topic for another full session.
That's okay.
So we're not going to that one today. Thank you, and over, please.
We will not go into that. But thank you very much, Mr. Ma. To round up, Mr. Okoro, to round up on this issue of small companies and threshold, be adding VAT to their sales.
Yes, no.
Hello, Mr. Koro.
Can you hear me?
I just wanted to answer that question from Ikechukwu. Yes, we
Hello?
can hear you now.
Sorry, I didn't hear the question.
Yes,
I didn't get the
Mr.
question.
Koro, we can hear you.
I didn't.
I said in
What did I
light
didn't
of
get the
this
question. Sorry.
shouldn't
Network
be
is
adding
bad.
parts to their sales.
Okay, let me take them. Let me take them. Can you hear me? Can you hear me?
We can hear you.
So let me just
Small
take the question.
supermarkets, like within the 25 million or just below the 25 million, of course. Okay. Oh my, go ahead.
Yes,
Okay,
yes.
just to avoid the feedback because there's network issue right now. So let me just look at the questions on the chat. Another striking issue we are facing is that our clients remit withholding tax in USD. This is not in our account. How do we get this notified in our account? We wrote to FRS, nothing done up to date. For USD issue, I don't know what is happening on tax forms, but from the days I've known FRS as an accountant, as an auditor, I've never seen them issue a USD, withholding credit note. I even went at the point in 2012 or 2012, I traveled to Ikoyi, who have the oil and gas tax office. I was in oil and gas then, to go and claim our dollar, withholding tax credit note, and it was never issued. So, okay, I don't know if you have any leadway on that in terms of tax promax and USD credit notes.
Credit note, yeah. For the tax, before the tax promax anyway, before the tax promax came into being, you actually can receive your USD credit notes. That's when it was being issued manually. But now, since it's been we've transitioned to tax promax, it's difficult to get withholding tax credit note in USD. But what you can do is to write to your tax office, where your tax file is domiciled. That's if the procedure is very long. You write to your tax office that you need your dollar credit note to be converted because what they do now is to convert it to naira and then upload it on your tax on your naira naira withholding, to add it to your naira withholding. So you write to your tax office where your tax file is domiciled, requesting that your credit note in USD should be converted and transferred to your tax promax in naira. I don't know if you understand. So, but then you have to attach schedule. You have to attach detailed schedule of those credit notes deducted, or of those withholding tax rather deducted, and then payment evidence from the company that deducted the withholding tax and remitted. You need to attach that and then submit it to your tax office. It will pass through some procedures before it will be incorporated into your tax promax. It's not as if you cannot get it, you can get it, but you have to exercise patience because it takes a long time for them to do that. Of course, it will be issued to you in USD, but it will be converted to naira and uploaded in your tax promax. So
but Mr. Obina here, Obina is telling us that he has seen a withholding tax credit note in USD sent by Total Energy and Saipem. And sometimes this year, you can actually make your payment for USD on the tax program. I'll look for the circular and send. So I think it has been.
That one is just it's a new addition. Yeah, it's a process. That's not really. It's a new addition, but it has not really commenced fully. That's why I said we can actually write that this particular one should be uploaded so that you can use it and maybe offset your tax liability. But if you enter some tax, like there's some companies tax promax page, you will see you may see $1 or $2 credit notes hanging in there. Is like I've seen some, but just few out of many. So if you follow that pattern, you can actually get your USD credit notes converted, and then you can use it when you want to offset your tax liability.
Gabriel, I hope this question has been answered. So finally, okay.
We lost you. Hello? Can anyone hear me?
Without service charge, based on service charges on other similar projects, is it proper to charge VAT on the invoice, on the PO value without the service charge? That is when you give a PO and you're supposed to put a line item service charge, but there's no service charge on that PO. Is it proper for you to charge VAT on the invoice without the service charge? Did you get that? Hello?
I'm here.
Did you get that, Ms. Obina?
If we have lost Oko, I can take the question.
Network.
I can take the question.
Okay.
A client issued gives a purchase order without service charge based on service charges and on other similar projects. Is it proper to charge VAT on the invoice on PO value without service charge? First of all, VAT, PO and VAT, I'm looking at the correlation. PO is the purchase order. It's until an invoice is issued. You know, if the service or the item has been supplied, it's not when you're issuing invoice, you now put VAT. Do you understand?
You put your VAT.
Depends on the kind of transaction. For example, if we are into labor supply now, let's say you're in an agreement with a company to supply labor, you know, to another company. Now, the company supplying the labor, if they declare that this labor, we are paying this amount of money to these laborers, then our commission and service charge is this amount. In my opinion, the VAT should not be on the labor cost because that is a pass-through cost. The VAT should be on the service charge, you know, or management or commission or management fee, or whatever you call it. That should be what you charge on, not on the labor cost. However, if the other company refuses to disclose the labor cost and giving you just one single invoice for labor services, then they may charge VAT on the entire invoice. Do you understand? If I'm the one who is the customer now, I will ensure that the supplier, this vendor, declares how much labor is so that I will not bear much VAT burden. Do you understand my point? You know, because those laborers' money in the hands of the supplier should be subject to withholding tax if they are part-time staff, or to payee if they are full-time staff. Do you get my point? So I wouldn't want to pay VAT on labor. So it depends on the arrangement or the transactions, you know, but for PO, I think is when it becomes an invoice. They'll talk about VAT, not when that's PO level. PO level is still a purchase order, it's still a contract. Is at the end of that contract, when an invoice is issued, now look at what are the VATable items in that invoice. Like I said, VAT is not based on industry, it is based on transactions. So what are the transactions in that PO? Are they VATable items? Then we can apply VAT on those VATable items? That's my one point. Then you said on that issue again is will be fast now. A school registered as a company, what taxes should they pay? Okay, are you there?
Yeah, I'm here.
So a school registered as a limited
company. What you said? The last one you said is what?
A school.
Okay, a school registered as a limited liability company.
Yes. Yeah. What tax should they pay?
Okay. Okay, if a school is registered as a limited liability company, of course, the VAT, no VAT is applicable for the school fees of student school fees. No VAT is applicable. Then company income tax is applicable. Education tax is applicable.
What is a business
name? A school engages. No, if it's a business name, company income tax is not applicable. Education tax is not applicable. VAT is not applicable.
So what else would they pay now?
The only tax that will be paid will be maybe if there are if of course you have staff, payee is applicable. Then you of course you transact with maybe suppliers where you have to deduct withholding taxes. Of course, you deduct that and remit to the to the Internal Revenue Service, and where either the fee or salaries of the proprietors, of course, will be subject to the normal personal income tax. So that is all. That is how far they can go.
So the profit made by the school, how will it be taxed?
Yeah. The profit made by the school is taxable in the hand of the owners.
Okay.
In the hand of the owners, yeah. Because now, you know, it's registered as a business name. So the owners are almost the same. The school is the same as the owners. So there is no distinction here. That's why if they are, for example, if they are requesting for tax clearance, you need to provide all the revenue from all sources, including that which you earn from the school. It's just like a teller, right? A teller that has registered his tailoring business in a particular name. Of course, if he's looking for a tax clearance, his income from his tailoring business and all that, because the business is the same as that teller itself.
Okay, we'll be ending tax clinic in the next few minutes, 2-3 minutes. Mr. Okoro, I don't want us to come back to this. Mr. Stanley asked a question. It's not too clear, but I'll try. He said an entity who is into recruitment organized a program and was sponsored by another company. A. Now, the sponsorship company, which is company A, is it entitled to pay VAT on the invoice sponsored? A is into recruitment, B is sponsoring A. Now, in the invoice of A, is saying that is B entitled to pay VAT on that invoice?
Okay, let me understand the question clearly. A is a recruitment company.
Yes.
And then B is another company that is sponsoring A.
Yes.
Okay.
And A sent an invoice.
And both companies, okay, both companies are, okay, A sent an invoice to B.
Yes. That's the invoice is what B is going to sponsor. So should he pay VAT on that invoice?
Let me understand.
It's not clear. I've read that question like 10 times.
If you say sponsor, it's not clear.
I want Obina Stanley to ask the question himself. I've asked him to unmute.
So ask. Have you unmuted him?
I've asked him to unmute. I've read that question like 10 times this night, and I could not.
Let him ask.
Let him ask what he wants to clear.
Hello.
Yeah. Good evening.
Yeah, we can hear you.
Okay, what I was asking was, company A is a recruitment company. Now, company A decided to organize a program for HR colleagues to come together. So they were looking for sponsors. So company B decided to sponsor part of that program. So when company A is invoicing company B, should they invoice and impute VAT? And if they invoice and impute VAT, they pay the VAT because it's a sponsor.
If it's a sponsor now, or if B is sponsoring A for a recruitment or whatever. Now, my question is that why A issuing an invoice to B?
See, we have to complicate matters. In that instance, there should be no invoice.
There should be no invoice.
There should be no invoice, except if it is what I'm thinking. If they are sister companies, and company A wants to find a way to send money to company B, you know, if it's a donation, you get my point. You know this kind of complex arrangement where company B is owned by somebody in company A, and looking for a way to reduce their profit or their taxes in company A. They will now find a scheme as, okay, we will sponsor company B for a program. So give us an invoice. In the books of company A, they will really put one kind of figure there and call it an expenses to substantiate that cost is wholly, exclusively for the purpose of that transaction. Do not send invoice to company A, who not pay the money to the account. It's just like profit shifting, you know, because in this case, there's no need for invoice. It's just a letter oh, kindly transfer, I'm sponsoring you. In fact, in sponsorship self, they can even pay for some vendors, supply some things, or just move the money to the account. It becomes a grant or donation and not sponsorship. Because if you give an invoice to that company A, in your own books now, FIS will see that as an income to you,
Exactly.
And you not be taxed on that money, which is supposed to be a pass-through cost. Pass-through cost means a money you receive to pay for something. It's pass-through. Shouldn't be in your books as income,
Okay.
except there are hidden things we're not aware of,
Or except a
Okay,
form of donation. Except a form of donation, they don't want us to know as donation. Maybe B is donating money to A. We classify it as donation. Because if you're issuing invoice, means there's a business transaction that has gone.
Okay, the reason I was asking was.
Continue, Mr. Vin.
Hello? Yeah, the reason I was asking was, now company A will record it as other income. Now, I remember when I went to the tax office at that time, I spoke with the tax controller, and I tried explaining to him that this is not a direct income to the recruitment of taxation. This is an other income. He said, no, it's subject to tax. And I said, okay, this thing does not relate to anything directly related to the company in regards to recruitment. So they added the other income and the income, and then gross it up to calculate the VAT.
Now you cost them now.
Out of 5.
Now you cost them. Now you cost them. Now you cost them. You see, we should be smart in our bookkeeping, actually.
Other income. Yeah.
Cool. You want to go to this matter? We want to take it offline.
Okay.
Yeah.
Mr. Okoro,
take this case offline.
How do you do the closing now with this Mr. Obina's question?
It's very nice.
Uma said I ain't cause am. I beg, waiting for classify am as.
That is another issue, because even the income itself, you cannot say it's exempted from VAT, because as far as it's not, the truth of the matter is that anything that is not in the exempt list is not exempted from VAT. Is vatable. That is also, we should just watch our transactions, whether such transaction is on the exempt list. So the issue of whether a particular income is vatable or not will not even arise. As far as you go through that exempt list and that thing is not there, it means it's vatable. It's as simple as that.
What me I would do if I was the one, what I would do, except there are other, except the company that received the sponsorship made some money from it. And in that case, they will pay tax. Because if it's a sponsorship and it's a pass-through cost, I won't put it as income. Or rather, I will tell the company sponsoring me,
I will just make stuff in the account. It will not even come on the account.
It will come out at all as income. You won't even see it.
But you will see it in your bank statement.
If they see it, it's even better. It's even better. I tell them how you treat the cost, because it's just like in and out transaction. It came and then it goes. You understand?
In fact, let me not talk what I will do, Seth. Let's leave that matter now.
All right. Thank you very much to all the participants. Thank you most especially to Mr. Okoro. Thank you very, very much, Mr. Umar, for this platform to express ourselves. We're really grateful. Today, we have come to an end of Task Clinic, and hopefully any question that was not answered should be taken to the WhatsApp platform, and justice will be done to that. But I don't think we're coming back to Task Clinic next week.
Oh, next week is open mic.
Am I speaking the mind of?
Yes, open mic is next week.
Open mic, so you can prepare
you can see us ask questions on open mic. Open mic is just anything business, accounting, and tax audit. So you can see us ask question on open mic next week. You're getting an HR professional in upper week for HR matters. We'll get a topic from her very soon. Then end of November, we have an IT expert that will talk to us about email frauds and safeguarding our cyberspace. So watch out for the adverts, flyers will be out in a short time. And God bless for coming. Thank you and over.
Thank you very much for coming. Chinenye Okeke, please, you could take your question to the WhatsApp group or I'll bring it to the open mic. Thank you very much. Have a splendid week ahead. God bless you all. Over.